It's time now for your Market Monday. Eric Foster from PYA Waltman Capital is here with us this afternoon. Good to see you.
Thank you.
All right, so we're talking about some of the stocks that have cooled off a little bit, global stocks and U.S. stocks since the year started.
Yeah, really a blistering start to the year. Not too long ago, you could look at financial markets and say a bunch of them were up 20% year to date. So again, it's always about our perspective. They've cooled off here in May, 3-4%, but if we do the quick math, that tells us it's still been a pretty great year so far here in 2019.
Do you think that'll continue to be the trend as the year goes on?
You know, it's hard to say. It always comes down to how well companies do. You hear a lot about recessions and tariffs and things like that. And those always are the kind of the blame for what's going on. As we've talked before, sometimes it's just stocks are already up 20%. Maybe they need to just cool off a little bit. I kind of doubt that if people around the world were truly worried about a mass trade war, that stocks would be up 15% today.
Yeah.
So we'll see. It always comes down to earnings and who makes money and who doesn't.
Right. Interest rates, I know, have fallen a lot in 2019 so far. Do you see that trend continuing? And what do you think this means for people maybe looking for a mortgage, in the market for a home?
It's a huge benefit for sure. If we look back at the end of September, the U.S. 10-year interest rate, that's the one that really matters a lot. It was at 3.3%. Today, the U.S. 10-year is at 2.39%. Wow. So you're talking about a collapse in interest rates. So if you're in the market to buy stuff, it's obviously a fantastic time to take on good debt, for sure.
Something to keep in mind. And investing, of course, like you said, really all about perspective. What should people be looking at?
Sure. One of the things that a big story that's an easy one to grab onto at a high level is U.S. stocks versus foreign stocks, especially over the last 10 years. We have one of the biggest differentials to the favor of U.S. stocks. But really, if you look under the surface of that, if you take the whole index, which is every stock, good, bad, U.S. stocks have just crushed it. But there's an interesting graphic that I ran across this morning that talks about if I just pull the top 50 stocks specifically, the percentage of those that have been the best, how much of those were inside the U.S. versus outside. It's astounding to see 80 to 90% over the last 5 to 7 years have been outside the U.S. So at the index level, what skews that is U.S. tech stocks. Huge companies done phenomenally well. Foreign stocks, European stocks, a lot of huge banking stocks have been the exact opposite, total disaster. You have a company like Deutsche Bank that's literally imploded. It used to be one of the biggest banks in the world. So it's one of those good examples of if I just look at the surface, I see the U.S. stock index and I see the European stock index, huge difference. But point is, there's great companies all around the world. My job as an investor, your job as an investor, how do I find the great companies and how do I invest in them?
All right. We always appreciate your advice. Thanks,
You're welcome.
Eric.
Sure.
Still to come here on